This market update is for Monday the 7th of March 2011, and the chart that we are currently looking at is the 10-minute 5-day chart of the Russell 2000 ETF, the IWM. As you can see, we started the day quite well. We actually gapped up. And almost touched the previous resistance level. The previous resistance level being $82.85. This is also the resistance that we hit on the 28th of March. As you can see, after just almost getting there, we started to roll over. We did. As you can see, with the rollover, we actually broke the gap, the actual gap support that we had here, and ended up forming a bear flag sliding along the 100 moving average here. We had 1, 2, 3 bars and then a straight break below, and also we managed to break through the trend line support that we had here. As you can see, this trend line seems to indicate a slanted head and shoulders pattern, with the left shoulder being here and the head being here and the right shoulder being here. If this pattern were to play out, if we measure the pattern from top here at $83 down to the approximately $81, say, that's a $2 drop from the breakout point. If we might subtract $2 from this point here at say $82, the completion of the pattern should be approximately $80. But carrying on from this break, once we actually broke this head and shoulders formation, it was just downhill from there on. Again, we attempted to actually form a base around $81. What we in effect ended up doing was forming another bear flag sliding along, and then once again a tertiary bear flag here, after which we did actually in fact create a base around previous support and resistance. This $80.50 level has actually been support and resistance for almost a couple of months now. As it stands, the afternoon session, after we'd pierced this a few times, as you can see, there's several tails there. This is where the bulls and the bears, if you will, we're actually having a tug of war, and after 1, 2, 3, 4, 5, that's 50 minutes worth of basing around this $80.50 level, we'd actually decided to actually try and make it an up afternoon. We'd had a recovery. As you can see, the stochastics were oversold for much of the day until recovering there. We'd also had a flip on the MACD histogram. I don't actually have the actual signal lines there, but I've got the MACD histogram. Once we'd actually flipped on the MACD histogram, we did actually have several bull flags. As you can see, this is our first bull flag of the day. But you can see 2 bars up, 1 bar down, followed by another bull flag here, 2, 3 bars almost up, 2 bars down, and then we were off to the races. Also, we thought pretty much we actually stalled out at the 50 moving average there. We did pierce it. A couple of we pierced it once. We'd failed to actually break above the pierce level just before the close, and failing to break above this pierce of the 50 moving average, we'd had the last 10-minute bar actually be a completely down bar here. as you can see. Carrying on, where do we go from here? Well, as it stands, we've been consolidating around this area for the last few weeks now. It looks like to me that there are major players who are positioning themselves for a breakout in either direction. Remember though, don't try to be a hero. Don't fight the Fed. We still have three more months of QE2. If we break out above the $82.85 level here, watch out for a retest of the summer 2007 highs of $85 on the Russell. Well, it's actually $850 on the Russell, but $85 on the IWM. There is a very good chance we may actually pierce the $85 level by 50 cents, maybe a dollar, before actually reversing trends. On the other hand, we have been long overdue for a pullback and may already be forming a topping formation. If I scroll this for a moment just to show you in 5-day increments how the markets have actually been going, you'll see that we've been, it looks to me like we've been consolidating around this area. We've had one major push above the $82.85 level back in middle of February. Since then, we've actually taken a tumble back towards $79.50, basing at $79.50, and then attempting a retest. But with the retest, we've actually failed to reach the previous high. We've missed the previous high by a whole dollar. It would seem on the 28th, as well as last Thursday, I believe. Last Thursday, the 3rd of March. And today, after having also failed to penetrate that $82.85 level, we had a fairly large down morning, after which we've recovered somewhat. But going forward, I think we're looking at possibly a mini double top formation just for the last couple of weeks, and we probably still looking for a follow through on this head and shoulders pattern here. I myself would be looking to actually enter a small short position just to test the waters between, say, the 100 moving average here and possibly last Friday's close. So between that level, if we do have another push up tomorrow, I'd be looking to actually enter a short position there and have a stop above last Thursday's high. So just take an average here, say about $82.25, and a stop above 83. So that's what I'd be looking to actually enter tomorrow, should that actually happen. And my target would actually still be the head and shoulders target that we actually had here, although we haven't actually fulfilled. There's a very good chance we have, and we've just not completely got the $2 down that we've actually been looking for. But the thing is, the previous base that we had at $79.50. So there's a very good chance that if there are a lot of people who are waiting for a second wave down, they may well push this and break below $80.50 and basically take the market down towards the next level, being $79.50. Anyway, this video is for educational purposes only and is not intended to be a recommendation to buy or sell any ETF, stock, futures or currencies or commodities at any time. Leveraged trading via futures or spread betting is very risky and can lead to you losing more money than you have in your account. Never trade with money you can't afford to lose, and always use a stop loss. Thank you.